Good morning, everyone. Welcome to the London session on TopstepTV. My name is Deeyana Angelo, aka Market Dee, and I specialize in some more alternative products such as precious metals and energies markets. Today I'm going to be looking at platinum. I think platinum looks interesting for further shorts if we can battle it out around this initial balance low. Now, if you're here for the first time, I have been trading for 18 years now, and 13 years out of that, I've been trading for various prop firms. All right, so what am I looking at here? And also it's CPI today, so that means that later on maybe there are some copper trades to be done because copper tends to be pretty sensitive to inflation. So that is usually my product of choice. That is a little less crazy, so I don't hold positions into the CPI, but I will absolutely look at trading something in and around right after, right? So basically, once the release is done, I wait for about 3-4 minutes, and then I try and see whether there's a setup. If there's no setup, obviously, no trade, but usually it tends to give us some nice moves. But for the London session, we're going to have a look at platinum. Obviously, my first choice for London would be DAX, which we still don't have. Don't ask me when it's coming. Your guess is as good as mine. The only thing that we can do is upvote the post on Topstep. And then maybe, someday we might see DAX. Okay, I did give my attention to this combine a little bit more yesterday, so most of what you're seeing there came from some copper, which I managed to drag out, and then also live cattle, which I've been learning to trade from Coach Hoop. We've been chatting nearly every single day. And yeah, it's a good market. I mean, I don't know why more people don't trade it. So I am learning about the fundamentals over there and how it moves, how it breathes. And it can trend at the beginning of the market. But then you have like about 2 or 3 scalpy opportunities as the day develops. So I quite like that. All right. Also not as crazy as some of the other things. So very, very much along my current mindset where, I don't want psychotic products. But rather than, looking at GC and NQ, I prefer something a little slower at this day and age, since I'm not getting any younger. All right, so I do have quite a few things open here, so I need to make sure that my computer doesn't blow up on me, so hopefully we're all good. Try to minimize all the million tabs that I've got open and everything, so we should be okay. All right, let me have a look at Bookmap. What's Platinum doing? Right, so once we get some more committed, okay, here they are. All right, let's try, because platinum is a cheap contract. It's kind of almost like a micro, but I still like to use some slightly lower positions. All right, so what are we gonna do here? So I'm gonna do like a super aggressive target to the downside. I'm doing a short. Now, there is a danger that this bounces from the value high and reverses, goes back into the initial balance. But until that happens, let's see if we can get some more committed selling. I'm looking at Bookmap, and yeah, there's quite a bit of sellers around still. Every time they try and pop it up, somebody comes back in and manages to sell it. But obviously that can change at any minute. Do I swing PL in my personal account? Yeah, so I have one of the kind of YOLO accounts where I do some slightly riskier positions, and over there, yes, I will run overnight platinum positions, especially if we hit some call levels from end of day options activity, and then I see either a long or maybe even a short from from the opposite side. But platinum is actually really good for longer term sort of intraday semi swings that you're going to keep for a few hours. So yeah, sometimes I will do that. Obviously not every day, because the swings are not going to be there every day, right? They're going to be very specific types of trades that we want to see around very specific levels. So let's say that we hit some kind of a demand level on the 4-hour or a daily chart, and then I also have some puts or calls there. I might pop in an outright futures trade to run overnight. I also have this anchored VWAP here, which you can see as a red line on the chart. Now I anchored that to the most recent relevant swing low. So rather than this one, I decided to go for a little bit of a larger target. So it would be nice if we can get anywhere near that. But like I said, we do have a couple of hypos, just like we did yesterday with copper. It's actually exactly the same setup, right? We're pretty close from the initial balance to the value area. And obviously the value high would need to break down into a special situation play for the value acceptance. If that doesn't happen, then the hypo would be a failed auction from value high if we test it. So if we don't test it, this is just like, middle of nowhere trade. But if we test value high, then bounce from it, that becomes the relevant failed auction long for my setups. If not, if we break down, then that's a value acceptance short, and we can expect this to rotate all the way through to the London value low at the very least, where I also have London average session range low. Now, what are these? Well, you know how we have ATR? This is kind of similar, but I use it as a level. I use it for many things, but in the core use for my average session and daily ranges is to use them as a level. They are taken from previous 10 to 20 days. So I take the regular trading hours or just the London shortened hours, which is what this is, and then I plot that on the chart as if it's a level. Now, over the years, I've tested that. It is my concept, which was a twist on the ADR idea that I already had at the time. And this is probably the oldest concept that I have, right? It's probably the simplest, but also the oldest. So yeah. Just literally using it as a potential projection for how far statistically we should be getting to, given what the previous 10 to 20 days have done. So I have sometimes I use like 10 days, other times I will use 40 days, especially if we have a contract that hasn't changed for a while. Now, on crude oil, that's not going to work because crude oil rolls every single month, like clockwork. So if you're going to do that, you would need to maybe use a continuous contract, which I don't think we have on TSX. But that's the idea, right? To have a projected range low and range high for the time period that you're trading. And I mean, I actually have someone who was even a coach in my company, and what he did is to go a step further to actually find the average range for the actual time zone that they're trading. So let's say they're trading for the 90 minutes, they will actually manipulate our indicator to show those levels. So yeah, it's it's one way of doing it. So you have to have some sort of an idea of what sort of a day we have. And, I use a couple of concepts to make that appear on my chart as a level of interest. If you have a day where, like copper yesterday, where we just smashed through all of them, that's a single direction day. And in that case, fishing for the other side might become a little dangerous. And sometimes you can have zombie rallies on equities that are very difficult to catch because there's no pullbacks. And, whenever I see a single direction day, I want to have a pullback first. And if the market doesn't allow me to do that, there is no trade, right? Because you have no reference levels, no nothing, no pullbacks, and your risk is sky high because you would need humongously massive stops to actually make anything work. So keep all of that in mind. Right, so we have some more selling coming in, but let's see what the volume is doing. The volume is waning a little bit, so I would like to see that pick up if this trade is going to do anything. But, for now, this 30-minute candle is still just about red or black on my charts. We do need a lower low, though. So, platinum is not super crazy like some of the other products. So it may take a while for this to work. It is a product where, I can kick off a trade, talk, answer questions, and still not be super worried that the stop is going to get taken out in 3.5 seconds. It can jump, like sometimes it can jump, like anything can, right? But for the most part, it should be a pretty smooth thing, which is why it's suitable for swings. When you have something like NQ, I said it before, that it's like a hit and run sort of product. If you want to run a swing there, that gets very painful unless you have humongously massive stops that can absorb all of the whipsaws and nonsense that NQ can do in a day. So let's have a look at some more questions now. Is platinum affected by the CPI? I'm thinking that gold, equities, and should drift a bit lower before CPI. Yeah, so I'm looking at... I was looking at what's going on across the board before we came on, and there can be this kind of offloading of positions ahead of any major release that could mean some more unwinding, in which case, if you find a short in equities, it will be a see money, take money kind of thing, because those sorts of moves are generally pretty difficult to catch. If you're already in on them, that becomes a little easier. But yeah, it's not one of those, let's hold the short in equities. It has to be a pretty special situation. Let's say that maybe the inflation is terrible, right, or something. Maybe that could cause a repricing for the next day or even the overnight markets. You can have very nice Nikkei reprice moments after CPI, FOMC, NFP. But it has to have a cause, right? It can't be just, let's just swing equities short for no bloody reason. You have to, let's say, have a rate cut that was maybe not expected. So therefore the markets are like gazumped and they're like, whoa, what happened there? Now we need to go to some, new levels. That could be a cause for reprice, right? Same thing with inflation. So if we get a big inflation number, that tends to have a kind of a day or two effect on the markets where you get, a post-release big reprice, right? So that's something that can be taken as a strategy, and I do that post FOMC. If we do have changes in rates, I will run a Nikkei trade. So I sacrifice sleep on that day, and I typically stay awake up until about 4 a.m., which is not very easy if I have the London session in the morning. So you will see me looking all like that, needing caffeine as an IV to actually wake up. But yeah, okay, we'll push through, right? Who needs sleep anyway? I saw Dakota earlier in here. I think he's probably gone back to bed now. But yeah, shout out to Coach Dakota for popping in. Hopefully you can get some sleep tonight. Let's see some more questions. Mode Katie Roslin. Hope I didn't butcher that. If I did, I apologize. Hi Dee, could you suggest what is the best moving average indicator to use? Is it EMA or just a regular EMA will be okay? do I need to use up to 3, and what is the best setting? Moving averages. I don't think there's a best indicator. I think when you're on large time frames, like the daily chart or something, you can just use, the standard ones. People like 9, 21, and 50 MAs, so just a regular simple moving average. Now, depending on what you're trying to achieve, when it comes to indicator use, you always have to know what the indicator is doing. I see way too many people who are like, oh yeah, I'm using indicators, and then I ask them, well, what are you trying to do with that? And they're like, oh, I don't know, just test those indicators. It's like you need to understand why the indicator is doing what it's doing. So the EMA is actually something that calculates it faster. So basically any changes in prices will be reflected a little bit faster than they are in the simple moving average. So if that is something you are looking for, then EMA would be the right thing to have. Now, what is the point of doing the EMA on a 50-day moving average or 200-day move? It has no use, right? What's it going to do? Just give you the line slightly quicker. Doesn't make any sense. So if we're talking about intraday movement, then there is a case for the EMA because you want that signal to come faster. And one of the things that I absolutely hate using intraday is the moving average cross. It's like that's something that comes from the investing side where you plan to hold your positions until the cows come home, and you're not worried about a few ticks missing out or missing out on 20-30 tick movement. But when it comes to intraday, moving average cross is probably not the best thing to be looking for unless you have like some massive trending day. Then it might be okay. When it crosses over and goes into zombie rally, maybe that might be an option. But really, something like if you're going to be looking at moving average crossovers, then the EMA on very low time frames crossing over something different. So not another EMA or not another SMA, but something like VWAP, for example. VWAP is a different product. So let's say you're looking at a mean reversion trade from this platinum. Let's say we were awake this morning. So we have this middle orange line is the 9 EMA. And let's say when it crossed over the VWAP, you can argue that is then a short intraday, right? It would be a systematic setup that you can have a look in certain situations, but you cannot use it on a 30-minute chart because it's too late, right? So by the time that it starts crossing anything over, you're actually looking at okay, so here it was crossing over long, so we had a nice trending day. But then what happens when it starts to do this sort of thing? When it doesn't go into a trend, you will get absolutely slaughtered. Why? Because it keeps crossing it in the middle of the range. So if you don't have that awareness of what is going on and realizing that this is not a trend yet, and that we're just pinging from a double top into a higher low, another higher low, it kind of looks like it's going to go up, right? But then it does this typical sort of Frankie fake out setup that I used to do when I was able to wake up a little bit earlier. So basically, Frankie fake out is something that we used to do in Forex instruments back in the day. It's not that great every single day now, but it used to be one of the main strategies. You basically wait until Asia high or Asia low are taken out during the during effectively Eurex opened, so that first hour of Eurex before London, and then you would look to fade that during London. So that is a setup that still occurs, but it's kind of not as juicy on most days anymore. And like I said, it used to be like a Forex thing, not so much anything else. But you can see it here, right? So we smashed through the Tokyo high, and then we reversed for London. So, if you want to do a trade that early on, that's something to have a look at. And then if I look at DAX, and I will show you why it's not such a great setup every day, because it did that today and it was very spiky. So if you weren't super quick with it. So what happened? Here we go. We have the overnight high. So this is Eurex, and then London smashes it through. Sometimes it happens at London Open as well, where it looks like it's going to break out and then it doesn't. So it did reverse, but it's like, really, to me, this looks long. Like I wouldn't be, I wouldn't be going short here. But if you want a little scalp or something, maybe down to this demand that they created, that would be, a scalpy situation. It's just I hate scalping because I think it's very labor intensive, and I just can't see myself scalping for the next sort of 30 years. Like I will probably age quite significantly if I were to do that. So, we want to put our mental health first. You can say I'm a bit of a lazy trader because I'm like, I want the least amount of effort for the most amount of gain. I'm not somebody who has this idea. Here's the thing. Here's something to think about mindset-wise. A lot of people don't feel like when they've had a big day, they don't feel like they did. Like yesterday, I did a trade on DAX that got me like $6,500, right? But most people feel like they need to do a lot of work in order to justify the amount of money that the market has presented to them as a windfall. I don't have that problem. I never have. I don't feel that if I had a trade that only lasted for 5 minutes and it still brought the same amount of cash, I don't feel like that is something that I need to then go and work for. It's like, oh, let's ruin the P&L now by more trades in order to earn it. And I've always found it very psychologically interesting that, people feel guilty. It's the lottery winner syndrome, right? We're getting a little bit of buyers here trying on platinum. Let's see whether they succeed or not. Okay, they're failing. If you wonder what I'm looking at, this is what I'm looking at. So when you start seeing this, it means that like more aggressive buying is stepping in, and then it just kind of smashes back down. It's like, nope. It's like you try and pop up and they go, nope. Kind of like one of my dogs that tried to jump up and then hit the head on the coffee table. And I'm like, yeah, you can't jump into a coffee table. Boom. So mindset and the guilt trip over windfalls, that's an interesting one, right? Like I said, you see it with lottery winners where they go from not having a lot of money to suddenly winning all of these like millions, right? What do? They go absolutely crazy, and then they start blowing up their lives. Most of them get divorced. Suddenly they have, age-inappropriate girlfriends. They have, houses that they can never possibly live in all the rooms. And, trust me, when I was a kid, like we had a big house, and you only end up using like 3 rooms out of the house. It's like utterly pointless to have a massive house when you don't have a massive family. If you do, you can justify that. But, usually we were a family of 4. There was me, my sister, and my mom and dad. And you feel very lonely in a big house as well, because you're like sitting there, there's no one around. And then at one point my dad installed like 4 phone lines. So that, this was like back in the 80s and 90s, right? So that's when I grew up. And you didn't have mobile phones. We didn't have mobile phones throughout most of my teenage years. That only came. And then I fought it. I remember fighting. I didn't want to get a mobile phone because my thing is like, oh, anyone can reach you at any point. That's like my biggest version of hell. Like, why would I want people to reach me? So in a way, it was my dad's way to kind of say, oh, let's all connect. So if I call you for dinner, I don't want to be, traipsing like around the entire house to see where you are. So he would just call us, right? That would be, the way to get everybody in the same room. But yeah, you see it a lot in lottery winners, where they just feel like they haven't deserved it, and then they start doing stupid things in order to deserve the money. And we see it in trading. We see it in traders who are not used to windfalls, and then you have a big day, and you're like, man, that only took like nothing. Like, it took no time at all. Oh, I need to earn this. I need to do more trades. That's the worst thing you can do for yourself, right? Just take it as it is. Try to be aware of the guilt trip that comes with this job. And don't think that this is like the opposite of every job that you've done. More hours do not mean more cash. More effort also doesn't mean better skills. It's better to work smarter than harder, right? And I learned this a long time ago in this line of work. So this is why, for me, scalping is like, why would just the other day I was in this other trading room just to see what's going on. And someone was like scalping 10 ticks on gold. Like, gold moves 300 ticks in one direction. And they're like, oh yeah, I'm just going to take 10 ticks. It's like, why? Why do you do that to yourself? It's like so much work. So while they're doing like 10 ticks, 7 ticks, 10 ticks, I will find a big trade, and I will, take whatever I took yesterday out of, I took like 83 ticks in the end from DAX, doing one trade, walking away, coming back. Okay, I did two because I tried one, and that got... it kind of dipped lower where I wanted it to execute at value high anyway, but I tried catching it a little bit higher just in case it went. So I killed that one, entered another one, and then held it for like 3 hours or something. It's like I only started managing it towards the end, like when it got to the final target. So it's like, why take 7 and 10 takes out of something that moves to 300? To me, that doesn't make much sense. So keep that in mind when you're trying to figure out what is the best trading style. Somebody said they like to swing platinum. That is absolutely the right thing to do. Why scalp platinum when it's clearly currently just going down? You can look for mean reversion back down lower, right? But until it's giving you a nice trending move, just breathe. Breathe, relax. There are breathing exercises that can control your mindset, that can control how you're doing things. And if you start to get any signs of a fight or flight response, like, your heart beating faster, getting tunnel vision, getting locked into every single tick and then freaking out over it, those are signs that you're not relaxed and you're not really trading from the prefrontal cortex side of you. You're effectively allowing the animal part of you to take control. We don't want that, because the animal part of you doesn't know strategy, it doesn't know risk management. All it knows is death threat, or fight or flight, right? So whenever you start feeling emotions, they never come from your prefrontal cortex. They always come from the primal side of us. So be very careful when you start experiencing thumping heart, pounding heart. Cold sweat is another one. Start feeling uncomfortable and feeling, knots in your stomach and stuff. That's all fight or flight response. But yeah, the best MA indicator, I don't know how we got onto this all, is the one that will be better for whatever you're trying to achieve. Larger time frames, stick to MAs. Lower time frames, consider EMAs. And then, I only use them as timing tools. I don't use them as any sort of levels, unless they're like 200 MA on the daily chart, right? And usually that would be in equities. So yeah. Is platinum affected by the CPI? Platinum is kind of affected by CPI, but not as much as platinum, not as much as copper, equities, and gold, right? So platinum will have an effect. Like it's one of those releases that will affect everything. But is it immediately bouncy? It will be a little bit, but it won't be like you will see what happens to like gold and ES and NQ. They go absolutely bonkers. So that's not going to be quite like that, but there's going to be an effect because it's such a big release that it affects everything. Inflation is a massive one, right? So it has a knock-on effect on the entire economy. Therefore, most asset classes, like maybe not, I don't know whether, lean hogs will be affected. So that's what I'm going to be looking at, live cattle and lean hogs, how they are, behaving through the release. Also another reason to run a combine rather than try that in your live. But yeah. What software is needed for my indicators? If you're talking about my core charting, they are currently only available for MetaTrader 5 on AMP futures. You need real futures. And we decided to go with MT4 back in 2015 because that was the most popular platform for retail traders. We were trying to fill a niche for the professional tools geared towards retail investors who are serious, retail traders who are serious, because there was nothing quite like it at the time for a sort of a sensible price. And we decided to use the platform that's widely used over this side of the pond. Now, over the years, that was obviously changes happened, and we had this whole thing about Russians and blah. Even though people who own MetaQuotes, they're not like, they are Russian, but they live in Cyprus, and they haven't lived in Russia since they were kids, right? However, Apple took it upon themselves to ban the MetaTrader platform from their app store, causing some speculation that there's going to be like sanctions or something. And it's like, what are you doing here? It's like you're taking one individual that has nothing to do with the political side of things and ostracizing them because of their nationality. Like, for example, I'm Serbian and I haven't lived in Serbia since about the early 2000s, right? So imagine someone just coming up to me and going, hey, you're the one to blame for all the 90s crap that happened in Yugoslavia, so therefore you can't do this. And it's like, I'm British, what the hell, man? Like, I've lived in this country longer than I have in my own, and I've been a naturalized British citizen for a long time, right? I don't even have a Serbian passport anymore, so it's like. And that's the same thing that was happening over in the drama via Apple App Store and MetaQuotes, right? So because of that, all of a sudden, everybody got spooked about MetaTrader 5. And, AMP Futures is a reputable company. Everybody knows them. It's, it's got a ton of platforms there. So it's not the only one, but our indicators are only currently for MetaTrader 5. We are working on Ninja indicators, but it's going to take time. We made some mistakes that have increased our lead time for when some of our indicators will be available. But hopefully, another thing, I am moving, by the way, so I need to say that because that will be happening in about a month or two at the most. So I am moving. We managed to sell this house, so everything is going through. The survey of the house came through. It was fine. I was a bit worried. I was very stressed out last week because this is a 180-year-old house. It's a Victorian cottage. It's beautiful. It's cute. It's like full of gorgeous character features and stuff. But it's old. So we were like trembling whether they're going to find something structurally wrong, which would have been a big, big problem. We would have had to, if they found something, we would have had to move out for like months and, serious works. Luckily, structurally, everything is sound. Knock on wood. So yeah, it's going to be time to move. So yeah, but once that's over, I might be able to take the reins a little bit more to see what's going on and to help out a bit more on the software side. But yeah, at some point this year, we should be having at least one or two of our flagship indicators. Not all of them, obviously, but we're going to try and bring market profile to Ninja, because there's like every single time I look at the market profile on some of these platforms, I'm just like, what are you guys doing? It's like, it's so unintuitive. It doesn't do what it just annoys the hell out of me. So this is why I went into creating something that you put on your chart. It works straight off the box, straight out of the box. You have automatic sessions. You can optimize it to death, but once you put it on the chart, it does what it needs to be done. So if you want the Blatic indicators, you will have to get a little AMP futures account. So what I'd say to most of my traders is to use it as a charting software, so not to like execute any trades. So just plop in like a little bit of cash in there just to open up a live account, and then use it as a charting platform. That's definitely a way to do it. There is also a way to connect your AMP futures into Ninja if you have an old license, I think. But don't quote me on that. So, Anyway, let's get back to what's going on in the markets. So I have been tracking platinum as I'm talking. We do have a 30-minute time frame closing inside the value, but right now they're still undecided, and right now they're still trying to fight around this 10:30 area. We do need 10:30 to go if this is going to be any sort of a serious swing. However, value high is one of those reference points. It's the edge of a distribution curve. So there will be some people who will be fishing for longs around here. Whether they're successful or not is going to be decided by the initial balance low, which is at 1032.2. So right now they're a bit far away from that. I do have I have a gamma wall at 1020, and then I have some calls up at 1050, right? Those are like bigger pegged areas that I want to look for. Potential maybe reversals, but right now for this particular trade, that will be more of a target. We're already far away from VWAP. It's CPI day, so we could have, anything happening. But my idea here is that we are going to go into the value acceptance and then rotate all the way through. Is this a big target? Yes. Am I going to hold it through CPI? No. So whatever this thing does, if we're still alive at that point, if the trade is still alive, it will be done, right? So 1:30 p.m. GMT, I am out of this. Rob says, check crude oil. Okay. Crude oil to me has been very quiet. I have been trading our bulb instead. Our Robert. So crude oil. No reference points. No reference points here. Maybe there's like yesterday's settlement, but that's a bit sketchy at this time of day. What do we have? We have an attempted move down. Let's have a look at the daily chart, just as a big overview. This was a swing trade that we ran a while back. Not hitting any supplies or demands on the larger time frame, so that's all higher and lower. Right now, for me, crude oil is in no man's land. And if I do anything with the energies markets, I will use RBOB instead. I don't want to be trading, less than $1 a day. That's just very painful. Most of the things that I trade, I demand to have an average session range of at least 180 ticks that holds every single day. If we have one day where it's like 87, the other next day, 100 ticks, next day, 80 ticks. It's like, is that a good, easy product to trade? No. If you're a super scalper, crude oil might work for you, right? You grab 10 ticks here, you grab 10 ticks there, maybe 20 ticks when it goes on a run. Wow, 20 ticks. But to me, this is not the same crude oil. Like, I can't continue to trade something that I've traded one way for 12 years, and then we got to last year, and it all dried up and started looking at Forex, like Forex circa 2012, right? I don't, there's better things to trade out there. I just don't want to torture myself with anything that doesn't have enough volatility in it, because it's painful for day trading, very painful. So I don't have an opinion on crude oil today. We are in rollover as well. So crude oil will be rolling on the 17th. And rollovers are very tricky because you get this... Paul H says the RB gap up a ton. That is a new contract, Paul. So we just rolled from H to J. The gap that you're seeing is usually contract rollover. So it won't be a true gap. It might get filled, but it is the difference between the next contract and the previous contract. So yeah. But yeah, I don't have an opinion. When it's rollover week, I typically stay away until it's done. Another reason to have other products if you're a true commodities trader, because you don't want to be getting involved in nonsense. What happens is that the volume gets split between the new contract and the old contract, and until the full rollover is done, you get these like spiky non-committal moves that don't go anywhere. Then once the rollover is done, you're like, okay, now I can breathe, Christ. I'd like to do the day range fills on RBOB, and I used to do them, on crude oil. It's the same exact idea. What does that mean? It means you get to almost the end of the day and then you see if there's a fade. The only time I wouldn't fade it is if we have like a Thursday and we're trending. So it's just like one-sided extension. And while you're on a Thursday, well, we have the bi-weekly options that happen in crude oil now since July last year, actually. And for some reason, Thursday tends to be the day when more trending moves happen statistically. So if you see, it's kind of like the don't fade a Friday rally. It's the sort of same idea. So if you see crude oil going on a run or falling, because crude oil shorts are usually the name of the game, don't do it on a Thursday, because it's not statistically a good day to be fishing for reversals. And in that case, I will be looking for a continuation for that time of the day. Okay, let's see. Can you please explain how to read volume on the right? Well, that's a loaded question because it's volume profile. Now, in its basic form, what it is, you're looking at low volume areas and high volume areas, right? So high volume areas means that you may have a supply there or demand, and you expect some kind of a slowdown there. So even if it doesn't go, giving you a reversal, it's going to cause time around there. It's not going to just slice through it. But the low volume areas, they will either pop into it, then pivotally reverse and then go back the other way, or they will smash through it, go into momentum trade and go straight through it. So that is like the expectation. The price velocity can be predicted, even though that's not our that's not what we're doing. We're not predicting, we're playing probabilities. It's slightly different, very different. So we're not fortune tellers. None of us have a crystal ball telling you, hey, this is going to happen. But we can extrapolate some statistics around the market generated information of what kind of price activity we should expect there. So high volume areas, expect a slowdown, maybe a reversal if if all the puzzle pieces are there. But mainly you are looking for the high volume area to cause a slowdown or a reversal, and low volume areas to either give you a very quick momentum trade through them or a very quick reversal. So hopefully that helps you start to look at the volume in a little bit of a different way. Volume profile also has this thing called the point of control. What is that? Contrary to popular belief, point of control is not any sort of control. It is actually the widest point of the profile, which is where most volume happened. Now there's another thing, a subtext to that, where when you are looking at when the volume was created, you can have overnight sessions that have lack of activity, but still build POC massively. Is that a valid signal? Is that like a good area to get involved? Generally, no. But if you have regular trading hours and then we get to an area and it builds and builds in volume and it cannot break through it, everybody's trading and we're still not breaking through it. What tends to happen is that you create the point of control that is more valid. That is more valid than the one that was created overnight. All right, we're getting some buyers here, but I can't make a decision until we actually reverse, right? So this means I have to wait for this candle to close because I'm not fishing for smaller trades. I'm fishing for bigger moves. But the buyers have stepped in, unfortunately, at the value high, which was one of my hypos. And that's fine. So if we manage to get a bullish engulfing, this would be one of those times to flip and go back the other way. But not before this candle is done. So we are trying to make a higher high. Whether we succeed, so we made a higher high on the micro structure sort of thing, but we still need to close inside the initial balance in order for this to be a valid value high failed auction long setup, right? And this is the problem with front running trades. You will always get smacked on the face. This is a feeler trade, right? So you do a feeler trade, it's like, oh, it's not going where I thought it was going. But you can't get lost in that, so you have to have another hypo and a systematic way of reading the market. So this could actually, what they like to do, if this is going to be a swing down, what they like to do is to test inside the value, but ultimately the 30-minute time frame ends up back below it. And then that's still just a test of the initial balance and not a failed auction. So they basically tried to go higher. They couldn't find anybody to take their orders there. And then you see more sellers stepping in. So I cannot do anything here. Like I always say this, once you have a systematized method, you have to follow it. You can't just go, oh, I'm just going to bail now because I don't like the 16 ticks drawdown. You have to commit to the trade, commit to risk. And then once you have the full signal, you can maybe consider flipping, but not, getting cut up completely. So, instead of doing 3 to 5 trades trying to figure out what's going on, you do one and then you do a second one on the next hypo idea, not the same one. But yeah. Where do you get your gamma levels from? I get them from Mentor Q. So I'm gonna... There is weekly yeah, try that again. There is weekly VWAP in value high platinum. Yeah, I know that. But I don't think that platinum is done with what's going on here, right? So we hit some very large time frame supplies and we are at the top of the range. So I'm not looking for longs here. If I was looking for longs, I want to look for them closer to the 10-20 area where we can justify the range, right? And on the weekly chart, you can see that range high even more. So it doesn't make sense at the time, without any breakouts of trend lines or anything, to get involved when we've already had this move. So we tried to go higher, and basically this, to me, this is shorts area from this big bird's eye view. I'm not taking the shorts from the weekly chart because that's, too big, but I don't want to be looking for longs here. I think longs should be fished for much further down. But okay, so that one definitely went into a big move up. If we make a neutral day type, that's still a short for me. Okay, so I have 3 hypos. But I'm not going to be going into a long here because this is too big of a move. Too fast, too soon. Never really ends well. So first one, value acceptance shorts from weekly supply. That's what I was looking for. Second one, risky, but it appeared value high long, like literally same things that I had on copper yesterday. Value high long, except yesterday copper went into value acceptance, and just so happened that I was looking for longs, and today this one went into a long and I was looking for shorts. It's just how it is. Random distribution of probabilities, right? Value high long and rotation into neutral day, and then that kind of continues into neutral day short with the bird's eye view. So those are the 3 hypos, right? So now this is middle of the range. If I get a test of the initial balance low, maybe I have a long trade there, but not before then. So you have to go into a pullback trade in order to get a good risk reward, because what do I have here now? Do I have 70 ticks to the opposite side of value? No. So I'm not interested. And like I said, I will lose 60% of my trades, right? Because I'm looking for massive moves and I'm not interested in tiny opportunities. If we manage to test 32, let's say, ballpark, I might squeeze out 50 ticks out of the trade. But, shorts are still the better choice for me here. So I want to actually look for a neutral day fade at the other side of value. Sorry, the other side of initial balance, which is up here. Let me put in another rectangle. I'm going to change. So let's say a liquidity sweep. And then background, we're going to do this. So neutral day fade would be once we take out the high, initial balance high, but also Asia high. I would like to see that happen too. And then we can fish for the shorts that might turn into something else, like an asymmetrical neutral day. That would be the most ideal thing. But let's see. Oh my God, DAX is really spiky today. And still inside initial balance, so I need to wait there. But yeah, so let's carry on with the questions. So yeah, gamma walls. I was gonna do the mentor Q. So gamma levels, gamma exposure levels from mentor Q. And you will notice Anne-Marie is using them as well. Tyler Smith says, hi Dee, I'm struggling to nail down a strategy. The market is so vast. It's hard to know if my strategy is even a strategy. I just feel lost. Where do I start to build a strategy? Are you a design strategist? Do you know how to build systems? If not, I would then go to someone that knows how to build systems. Because that is kind of like saying, Dee, I don't know how to build a rocket. Can you help? It's a big skill. There's a lot of math behind it. Most of us who have been doing this for a long time, we eventually came up with with strategies, but you don't just come up with a strategy, right? You go to someone who already has a strategy, and then you mold it to whatever you want it to be. Sometimes you can have great strategies that you can just take, learn, and off you go. However, in my experience, everybody is slightly different. And if I give my methodology to, 100 different people, they get 100 different results, because we all trade from the self-limiting belief side. And, we're all, some summarized life experiences that we've had up until this point. So everybody will be looking at the markets a different way. Now, as humans, unfortunately, a lot of people are very averse to like following rules. So you really spend most of your time as a trader beating into yourself that you must follow the rules. So that's the biggest problem, right? Let's see if overnight VWAP can give some more shorts here. Because that could be another setup, actually. So I'm trying to wake up a bit more. And again, I'm not a morning person, so my brain just doesn't really work the same way. I usually wake up around sort of 1 p.m. So this is another reason why I don't like trading super early, because I just do stupid things. And then, luckily, I can drag myself out of them, right? But I've noticed a pattern where, and I'm talking, I'm trying to take in all the information rather than just focusing on DAX, which is usually easier, but we don't have DAX, so yeah. So fourth one will be something I call weeb setup, weakness inside initial balance. There are caveats to that, so there's like certain conditions that need to happen before weeb is valid. It can't be just, oh yeah, it's weakness inside initial balance. There's time of day component, there's like, extensions and whatever. But basically, because we have VWAP and, Platinum does like to bounce from VWAP, and I am looking for shorts mainly. So if we get some committed selling here, so they got up to VWAP and stopped. Let me see if I have a level there. And it is gamma exposure 3, which can be a decent level as well. Let's drop down to 100 tick chart so that we can look at this. So yeah, hypo 3 might be, hypo 4 might be the one that plays out here, in which case it's another short. But this is too high up for my good risk reward on the failed auction trade. So let's see if there's weakness here. But yeah, building a strategy is to do with knowing your levels, which, as somebody who's struggling with a strategy, you're not going to even know, what the hell you're doing, right? So you need to start with a system that isn't flawed. Many people start with moving averages, and honestly, moving averages are my least favorite way to do things. And then you have, RSI and moving averages. To me, that's fine for something that doesn't have volume and order flow and where you can't see orders, and you're going to trade, maybe with huge discipline and not be bothered when, the day type is not exactly what you expected it to. For everything else, there are better ways to observe things. So market profile, we had Jim Dalton just the other day on our channel. So let me post a link to that. I'm a huge proponent of market profile. Now, I have my own twist on it. I definitely have my own twist on it. So this is Dalton's segment, right? And the thing about market profile is that it's quite wordy when you first start with it. So you're like, okay, so I'm going to start with market profile, and I'm going to decide that going to decide that this is going to be my strategy, right? And then you read the books and you're like, okay, I think I know how to do things. And then you start to look at the markets. Now, the first step and the first awareness let's try this again. I'm going to use a two lot instead of 3. The first sign that you know you have something going for you would be that you are effectively understanding what is going on with price activity. So, for example, you see me, I'm not confused by the fact that my trade number 1 didn't work out, right? Why? Because I'm very aware of what's happening. I have orientation points. But when you start first reading the market profile, you're like, wow, okay, I can understand everything. But then you find out that you don't know how to position yourself in relation to that. So you go, okay, so I can see that now there's a failed auction. What the hell do I do with it? Where does the stop go? How do I get in on this? Like, I can see it's happening, but I'm not sure how to make money out of it. So that is actually a common issue with market profile. Now, the market stalkers method, which is mine, I combined a few things. So it's not just profile. I start from supply and demand, and then I go deep into average ranges, time of day behavior for specific markets. When things actually happen statistically intraday, because time of day is a huge thing for my style of trading. One problem with London that it tends to be a little bit more random, especially for these products that are not typically core products. Platinum, copper, they generally consider COMEX as their regular trading hours. Now, recently, in recent years, they have been moving more for London, which is why I've kind of chosen them. But generally, DAX is what you should be looking at as your primary product for this time of day. Bund as well. Bund moves really well. It's basically bonds, German bonds, right? Okay, so VWAP is giving us a little bit of weakness here. Whether it's continued or not, nobody knows. But yeah, we'll see what happens here. Whether VWAP is going to be our stopping point. So what I've done here, because I've gone into 2 contracts. Now, I've only reduced my position size by 1/3. So it's not 100%, it's 1/3, right? If this goes above VWAP, I do want to have a little bit of protection there. So I'm using a partial stop loss to control the downside a bit more. If it goes all the way through the initial balance into a rotation, then obviously I want to make sure that I'm not smacked on the face with the full 35 ticks. But there's a good indication that this might be turning around. However, I will not be adding a 3rd contract until we get some more weakness and until I confirm that this is indeed going a little bit lower. But for now, there's a bit of a fight between what they want to do with this. So it's like, are we going down? Are we going up? Are we going down? Are we going up? They found some business here below initial balance at value. But from a larger time frame, I just don't think that's a valid play. So this might be pretty short-lived. Again, don't quote me on it. However, when you're building a strategy, you need to start with a method that actually has merit. Levels that are not nonsense. And that have a high statistical probability of working out. So VWAP is one of those, right? You can start with VWAP. Then you can build on that. You can go, okay, we know that the initial balance edges, the first hour of trading of any exchange, that is pretty reactive in most markets. So maybe let's start looking at that. How about we look at value areas? What's that? That's a distribution curve. But I think that when market profile throws everything at you at once without much explanation of what it actually is and without reliance on time of day as a reference, it's a little overwhelming, right? So you go from, I don't know anything about this, and you read the book, it's like, wow, this is eye-opening. How do I use this? And then you're watching the market, you're watching all these reference points, and you're like, I can see what's happening. So situationally, I'm there. I just don't know how to use this. This is where you have to look for actual price action activity. So rather than, staring at the 15 and 30 minutes, go to microstructures, and this will take time, right? So it's like, what do we have here? We have a bit of a higher high. Is it going to make a higher low? We don't know. So you wait for that. And you have to stay objective. So you have to see whether... So on a microstructure, why do I say higher high? Let's have a trend line. So we had a bit of a slowdown here, smash down, and then it makes a higher high, right? You can even have a look at this one here as a potential point of reference. That's also a higher high, right? So now in order to confirm this, we need this demand, intraday demand that was created, roughly like that. We need that to hold. But there's also a possibility that they test there first before they go higher. So what do you want to see? If I'm in a short, and this is my only point of reference, I actually need to see a lower low past this level in order for my short to be confirmed. So where can you add safely? Well, you can't add here for your third contract, because that's going to be potentially creating a higher low, right? Don't want to see that. So really you can only add once we're back inside the value area. And because it's so far away from the current entry that I have, so let's say best case scenario, we do go down away from VWAP and we manage to smash below it. What's going to happen? You can't add, another 2. Because that's going to be 100% increase, and it's going to screw up my average to high heavens. So then my stop loss is not going to make sense. Nothing is going to make sense. And the only way to control that will be to stop moving stops to nonsense levels. If you can find a lower structure that will be 2 highs away, so not just 1, but 2 highs away because it's such a small time frame, you can justify moving a stop based on lower time frame structure. All of that, all of the stuff that I'm talking about, this takes about 2 years to develop, and that's if you're really diligent with it and you're really into it. And you still have to be okay with being a good loser. That's a big secret. Not freaking out when you lose, but just going, okay, that didn't work. Most people, what do? They start clicking buttons. Oh my God, I need to get it back. It's not yours anymore. Okay? There's no getting it back. So chill out. This is just some money. It's not, a lion chasing you to kill you, which is what our brains think it is. It's literally just expense. It's a business expense. So if you can start looking at it from that point of view, you're not going to be bothered by it as much. So you can just go, okay, let's see what happens and how it happens. Let's look for evidence to speak to my hypos, right? That's how you build a strategy. Now, once you nail those basic parts, and that's just the first step, then you have to see your setups, right? You need to systematize your setups. Look out for the risk-reward versus accuracy balance. So system design is not something to take lightly, to just go, oh, I'm just going to click a few buttons and that's it. It's a data science. That is why you have PhD people creating systems for hedge funds and not your mate Dave down the road, okay? So think about that when you say, I don't know where to start with a strategy. Yeah, because it's bloody difficult. That's why. For me, I didn't come from a maths background and I came from a music background. So I have some different talents like pattern recognition. I see things that other people don't see when I'm analyzing huge sets of data because I've got photographic memory so I can notice patterns quicker. But I don't come from a maths background, right? So I had to learn that. And how long did it take me to go from swing trader to intraday trader with a good system? 7 years. So 2 years for intraday. And, I was a pretty good swing trader because that was easier. It was like, almost like remedial math. You go for an extreme of of an area to the other extreme usually would offer between like 4 to 7 risk reward. You would trade like once or twice per month, and that would be your trade, right? It's a very different way of looking at things. No time constraints. Your positions are not sensitive for intraday movements. If you're wrong, you're really wrong. Yeah. But eventually I got there, right? I got there and I understood the differences between high risk reward and then medium risk reward, the power of medium risk reward with medium accuracy. So you're like 40 to 40, like I have a long-term accuracy of 43%. And however, my risk reward is usually between 1.7 to 2.3 R, depends on the time frame. And rarely does it dip, even at times when when I really suck for whatever reason. It rarely dips sort of below 1.5. But at some point, it starts to bleed money, especially if I'm not diligent with position sizes. So changing position sizes constantly, that can introduce a huge variability into the system design. And most people are like so willy-nilly with their positions. Oh, I'm going in with 1. Now I'm going in with 10. Now I'm going in with 5. It's like, what are you doing? And then they go, oh, it's not working. I'm not surprised. So keep your positioning consistent. Like in this combine, I'm trying to do 3 to 4 contracts. So I'm not, going from 1 to 5 to 3 to micros back to 3. It's going to be in like 2, 3, maybe 4 if I see that it's really going and I can scale in. But, you can vary up your position sizing maybe 30%, but not 100%, 200% like we see people doing all the time. All right, so this VWAP is bringing us some sellers here. So shorts are still present, I'm doubting this whole failed auction purely because of where we are on such large time frames, right? So we're at the top of the range, and if you look at, is there a way to like hide objects here? Because I know there's a way to do that. So if you see how we behaved upon touching the weekly supply, immediately we had sellers. So what is going on now? Well, we're distributing. What does that mean? It's going into a sideways movement. Is it creating a higher high? No. So what will your call be on this? Like longs into a supply that hasn't worked? Longs into a supply that has worked? So, if you're struggling with system design, just go to someone that will give you a good template, right? Good starting point, or even a half chewed up strategy that you can start using immediately without you spending the next, 5 to 7 years wasting time watching silly YouTube videos that only tell you a partial story. For example, I would never uncover all of my secrets. I give out a lot of it, but because trading is so difficult, but I still have some like proprietary things that I will only talk about in the program. It's my intellectual property, It's not a charity where, you just give out things for free because you're a great person. Like, I'm willing to help people, but there's certain proprietary things that I'm not willing to divulge. Why? Because I came by that particular epiphany with great difficulty and a lot of cash involved, right? A lot of mistakes on the way to get to a point where, I can find 3 to 5 trades in a day with great confidence. So, go to someone that already has a system. Go to somebody who is trusted in the industry, not some doofus on the internet who's like, who's like full porting 20 Apex accounts and stuff. There are people in that community that are legitimate traders, but a lot of them, you will see the Lambos, you will see all the hallmarks of showing you the results rather than actually going, hey guys, risk management, risk control, position sizing, starting slow, being diligent with your cash. Because remember that a lot of the YouTubers, they throw cash around like it's nothing. And then people who are not in the same position, who are watching their videos, they do the same thing and get themselves into a big problem. Because suddenly they're, they bought 100 accounts from all over the place, spending a lot of cash with dollars in their eyes, thinking, they can do it, I can do it. And then what happens? You have a huge debt of like $3,000 that most people cannot afford. We're in some very difficult times. Like I can see some normal people who are like really struggling, and I say to some of my friends, "Oh, let's go to dinner or something." They're like, "Oh, we have to make sure it's not super expensive because I only have like something ridiculous like £50 to my name," and I'm like, how do you get to a point where you only have that's another thing. But in this industry, because of the trading is expensive, man. Like it's expensive. When you're learning, it's time, money, and effort, right? It's not just just a bit of time. So if you're following certain people who are at a very different place financially to you, and you're trying to emulate them, that's the danger. You are actually going to completely ruin your standard of living attempting to emulate that. I am very careful in all of my YouTube videos, including my own channel and TopstepTV, to not do that. To not say to people, everyone can make 10,000, 20,000 after signing up for an XFA, passing your funded account. Yes, sure, just go max contracts. And, if that doesn't work, get another account. Is that good trading practices? Is that what we should be preaching? I don't think so. And I think it's actually detrimental to some degree to be showing people with massive position sizes. However, don't just look at the massive position sizes that even we talk about on TopstepTV. Hear what Mick says. It's like, yes, they're like, Anonymous made $100,000 and then went on a 43-day losing streak. And then got lucky again and made 50 grand. Like, hey, that's not real trading, okay? That is gambling. That is something that I personally don't endorse. And I think it's detrimental for everyone. But hey, it's good TV, right? So there you go. And I get it. I get it. We do want to showcase people who have managed to make, a ton of cash. But I just think there should be a different side to the story as well. And full props to Mick that he does not give allowance to those people. And he does not go, yeah, he's great. He's not great. He pulled him up on shoulder tap, right? So be very careful when you see huge money from people who obviously come into this game with very large position sizes. That's not sustainable, Every time I saw that in prop firms, like we had this guy who was in his 60s, who had a problem he was always doing this thing where makes like 60 grand in a day, right? And the next day he loses 120. And then the next day, like I remember this one day, he was like, "Oh yeah, I made it all back." And I'm like, "Congratulations, you scratched. Yeah, great trading, mate." And he was like, "Yeah, who are you to tell me anything? Oh, I made 100 grand." And I was like, "Yeah, no kidding. But my monthly P&L is bigger than yours, and you have massive swings. I don't. So." And then we had a huge argument, and he got really cross with me, and then he think he lasted probably about 6 months, and then we never saw him again. So, but take it as you will. System design, very difficult, and, massive position sizes are definitely a variability that should be taken into account. You need to know how to calculate your drawdown. Like, what drawdown does your strategy have at the worst case scenario? How many days, if you're following the strategy, how many days in a row can you lose? Okay? All right, let's move on from that topic because I went on a bit of a rant there. See what happens when you have coffee? You have a coffee, you have a rant. And again, guys, nothing against people who make, big money, but just look at, Nick for a tick, look at even Dakota, when he was trading large, he had a very large account size, but as soon as he gets on a bit of a drawdown, he pulls it back. He doesn't just keep going, right? And he's very aware of it. And, Nick for a tick, he said it himself. I have huge respect for Nick. He's such a nice guy. And he's like, yeah, you'll probably never see me making like 30 and 50K. I make my, 2-3K a day and I'm done. Now, 2-3K in one day, if you were to not pull down money and you're constantly making that without huge drawdowns, okay, a bit of trader math there, but that's over $1 million a year. Okay, so when we say, I only had $2,000 a day, like, let's come off our high horses there, right? Let's just have a look at how normal jobs are. If you say to somebody, hey, I'm used to making $30,000 a month, trading. So what's that? So throughout the whole year. Let's see. So you go to a normal job and say, so what sort of salary are you looking for? And you say, about $360,000 a year. They would just laugh in your face. And they would, march you out of the building. It's like, what are you talking about? So that's the kind of thing. And what is $30,000 in a month? Let's also do a bit more math. 20 trading days, right? That's 1,500 a day. So if I hear someone telling me that they're chasing some crazy amounts of 5, 6, 10 grand, and yet they're not able to sustainably make 1,000, 500, 200 a day, you're just like in dreamland, man. Total dreamland. I'm sorry, you're in dreamland. Trading is scalable. If you can do it on 2 micros and maintain consistency over a month, 2, 3 months, 3 months, and not lose an XFA, that's scalable. Yes, you will get to a point of making 2, 3, 5, 10 grand with that process, but not the other way around. You don't come in with like suspicious, suspect strategies that don't really have longevity if you put time into consideration, and then go chasing 10 grand on the first week of your XFA. It's just like, don't do it. Okay. Dee, how long did it take you to boost my confidence in trading? Okay, so with swing trading very quickly, it was like 9 months. And I know, like 9 months, it's not quick at all, right? But it's not a week, it's not a month, it's not 3 months. You need time in the game. And for intraday trading, it took me so when I went into intraday, I was already trading for 5 years. Okay, so no means a new trader. Newer, but not new. And then I went into intraday. Haphazardly, I was making money, but I did a lot of mistakes. However, it took me 2 years to get confidence in what I'm seeing and confidence that I can take advantage of it. However, it took another 2 years before I was like, okay, day range fill, RBOB, crude oil. This is my setup. You've seen me do those for the Back to the Futures, right? I'm very confident in them. I'm not like, I'm not sure. No, I like, bullseye, 1 trade, maybe 2, but, bullseye, 160 ticks. Okay? That took nearly 9 years. So take it as it is, right? It's like confidence in the time of day, confidence in the sample size that I've observed that setup happening so many times. Now, London on these products, I don't have that much experience. Like, I will be very honest with you guys. I only traded precious metals for COMEX. Only last year I started looking at them for London because of these sessions. DAX, I have about 7 years experience in DAX, right? DAX for London, I know it well. I know it to the core. When I do a setup in DAX, I'm like, yeah, this is happening. I've seen this, thousands of times before. And I have, thousands of trades to account for the sample size that I'm looking at and basing my setups off of. But platinum copper during London, that's something that started happening reasonably recently. So you can't even have a huge sample size because it's a kind of post-COVID development. And then it doesn't happen throughout the year, every month. It's like 1 month is very quiet, so I push the platinum and copper away from my tradable instruments. Then we have, the time where volatility picks up, so I would trade them a lot more. But all of that means that the sample size is not that big. I need to clear my throat. Give me a second. Right, hopefully I managed to clear the throat, but yeah. So yeah, it took me almost 9 years to, be really, really confident in what I'm saying and not be bothered by losses. I think that's the biggest secret, right? Instead of going, oh, how long did it take you to be confident in your setups? The bigger issue is how long does it take you to not freak out by a loss and to be able to drag yourself out of it. So that takes a long time, right? It takes huge deliberate introspection. It takes awareness of your own emotions and learning how to disrupt them when they crop up. And then eventually your brain and your body finds like efficient ways to deal with the losses without stress, without freaking out. Why? Because you learn what is a controlled loss for you. What is a comfortable loss for you that doesn't make you freak out? Every person has a different risk appetite, okay? So for some people, losing 100 a day would be a massive loss. For others, losing, 10,000 a day is not that much of a big deal. So find yourself, there will be like a number, monitor, and then also what is your, the number that you see on the screen where you start thinking, okay, this is a good day. So you start to learn about yourself rather than just the strategy a lot more. And then you learn about working with yourself and the strategy and modifying that over time. But it takes time. It takes time, Can you recommend, hold on, can't see what that says. Let me move that over to another screen because my eyes are now not working. Is that better? Can I recommend a platform? Hold on. Let me just get my reading glasses. That's better. All right. Yeah. Can I recommend a platform? Use whatever you're comfortable with. Okay. I am generally comfortable with Ninja Trader, MetaTrader, Topstep X. I am comfortable with. And it's a clean platform, but I only use it for execution, not for charting. I've used Motive Wave. Not a huge fan of Motive Wave. I've tried Quant Tower, also couldn't quite gel with it for some reason. Not to say that you shouldn't try it. But look, again, we're all different people, right? So you should try all of them, right? You should try every platform there is out there. And see what you're comfortable with. Once you have more experience of using different platforms, you will have a better idea of what gels with you most. And then if you find that you like charting in one platform but execution in another, do what I do. I keep my charting in one and execute wherever the prop firms want me to execute, right? But I am very comfortable with Ninja. I've got to say, I have a soft spot for Ninja Trader, and 9 times out of 10, I would say Ninja is pretty decent. But with the prop firms, on rhythmic and all of that, that's a different ballgame because you're kind of at the mercy of the data feed from Rhythmic, which is not that great. So from that point of view, I'm not that keen on that. But for a personal brokerage account, you know, Ninja is pretty cool. Dee, can you recommend mixing ICT and market profile? Well, Edward, what you will find is that ICT uses concepts of market profile and that have been renamed and repackaged, but it's the same thing. Like, for example, manipulation and what does he call it? 1040 macro. That's a failed auction, mate. You know? Fair value gaps, those are single prints. Take it as you will. I think I had a rant on ICT yesterday, so I'm not going to go into another one. Which would you recommend, bookmap or footprint? Okay, so for me, I tried footprint, didn't like it. Okay, tried for 3 years, didn't like it. Didn't gel with it for some reason. Bookmap for me, even though it's a cartoonish version of time and sales and Dome, it works for me. So I would say bookmap, but again, I have my own personal coaching students who absolutely despise bookmap and they prefer just the regular time and sales, right? They have the Dome and they have time and sales like this. And then they go, what are the orders doing? They have the volume at the bottom and they go, let's watch. And then they get a good, like it's the same information, right? Whether I'm looking at this or whether I'm looking at time and sales, Dome and volume, it's the same thing. Again, try them both, see which one you gel with better and stick to it. You know. The Orient Earl says, Dee, what do you consider as a good Sharpe ratio? Sharpe ratio in intraday. I have beef with that, right? Because I think that K ratio might be better for intraday. Sharpe is more for investments, right? Long-term investments. I've seen intraday traders who have a reasonably low Sharpe, but they are very profitable. So what does that tell us? That maybe it's not the best measure of profitability. There are things in the Sharpe calculation that I just don't think apply to intraday, but that's my thing. So K ratio would be something better. There's another one, again, a bit too early for that, but if I can get my brain to figure out what is the other one? Let me see if I've got it on my phone actually, because I usually have certain points that I want to talk about, sometimes in YouTube videos, and then I write them down. So no, so what is the other one? Let me have a look at Edgewonk, whether it's got it. Because there's definitely, it's just my mind is going completely blank. Oh, okay, Edgewonk is down. Okay, great. Won't be able to do that because this software won't open. But yeah, so K ratio would be my go-to for intraday. And yes, I look at my K ratios every single month. So once I'm done with trading, I would look at it. But there are other things intraday, like for example, what time of day is the best for you. So rather than the overall performance, you want to dig deeper into your stats. So not just going, what is my overall Sharpe? It's like, no, how can I make this better? You know, Sharpe ratio is for like established hedge funds that have good strategies and they're running investments, right? But they are finished strategies. They're not like, you know, going through an experimentation phase. Let's see how it works. It's like they have billions of dollars invested in them. And if they did that with their investors, the investors wouldn't be particularly happy. However, us as developing traders, you know, especially somebody who's just starting out, you need to drill deeper into your stats rather than just a generalized ratio of some sort, like whether it's sharp, whether it's K, whether it's something else. You need to go things like, okay, so what happened with this setup? Would I have benefited in using a slightly bigger stops? I see people using very tiny stops and then getting smacked in the face and the trade goes their way. Is that the fault of the market, or is that trader error, the problem between keyboard and chair? PBKC error, also known as. So, as intraday traders, we have to look at time of day, stop loss size. Were we right or wrong on direction in general, regardless of whether we were in or not? Did we stay in long enough? Okay, so if you only took 10 ticks but the market ran for 300, is that a good trade? That is leaving money on the table. You want to get at least like 30% of that move, at least, when the opportunity arises. Did you identify the day type correctly? Things like that. So I don't think that just looking at sharp ratios is a good thing for intraday traders. What's your total experience in the financial markets? 18 years, mate. 18 years. I started in 2007. I look younger, but most people by now know how old I am. So I'm not in my 20s, I'm not in my 30s, I'm in my mid-40s. And yes, I do look younger. When I was in my 20s, I looked 12. So that's worked out for me. At least now I look like I'm in my late 20s, right? So maybe early 30s now. D, still short gold from 29.23. Took profit at 29.10 and 29.07. Still growing negative momentum. Yeah, I mean, look, it is the day for unwinding positions ahead of CPI. Definitely. So if you see the momentum continuing, let's have a look. Where are we? Oops, no, what is that? That's live cattle. That's D being blind. That's what that is, because on CQG it's a similar symbol. GCE, not GLED. Get it together. Okay, so I have the average session range low at 29.03. I also have the average daily range low massively below. I don't know whether 28.80 is going to be reached, but 28.86, if this continues to bleed, is definitely on the cards. However, watch out for the CPI, because don't hold that into the CPI. Hold it up until COMEX open, kill it 1 minute before, okay? Wherever it is. Please don't gamble, because even if you're in from 29.10 and we don't bleed all the way down to 28.80, by the time CPI comes, you're going to be looking at a trade that is not far enough into profit from the release to account for a massive CPI whipsaw that we're going to see. You might get lucky, it might just fall. But you might get really unlucky and it might turn around, smack you on the face and then some, because slippage is massive, even on SIM. They try to match orders, so they are definitely definitely some caution there, right? So don't hold it into CPI, especially not if it's around this area. Paul H. Hey, Paul. I noticed the DOM in TSX often shows the order sitting about 20 ticks only in either direction. Does Bookmap show data for the entire book? It doesn't show hidden orders because, like, nobody knows that, right? But hidden orders is only, like, what is hidden orders? It's orders that are sitting outside of what TSX is displaying. So when we go to Bookmap, you will see that on some products, there are orders that were there, and it kind of keeps track of them, right? So they're not hidden. It's just that they're there, like the exchange is giving it to you. But it's just that the dome is like 5 or 10 levels deep, not 100. For something like DAX, it's similar, but you can see that they still keep the orders on the heat map. So you can see there are orders up at 22,200. You can see that there are orders at 22,100. And then to the downside, we haven't been there today. However, heat map will hold the history of where the dome had the orders lost. Now, as we approach those areas, they will reappear on the heat map. So again, history of the dome, which you don't really get on the regular dome. Another reason to maybe have a look at it. But just be careful, because some people, I know, Paul, you're fine, but some people get very confused and overwhelmed by Bookmap, because suddenly it's a whole bunch of things and you have no idea what you're doing with it. Let's do a couple more questions, then I'm going to bounce. Tessanix says, hi Dee, what do you think about trading with indicators, especially Ichimoku and pivot points? Pivot points, yes. Ichimoku, nah. It's going to be one of those things where you can use it in a trending market, but then you can use anything in a trending market, I don't think that Ichimoku is a good indicator. It's one of those retail forex things that used to be peddled by the very dodgy brokerages back in the day. It's kind of like moving average cross, or when I had a conversation in 2010, so I was already trading for 2-3 years, and a new brokerage, I was switching brokers, and he calls me up and he goes, yeah, so, you could be doing things like, entering 3 contracts in one direction, then as it moves 10 ticks in your favor, you add another 3 and another 3 and another 3. And, you use that leverage. And I was like, are you insane? And he goes, I'm sorry? And I was like, that's martingaling. It's like, what, you want to blow up an account? Yeah, go for it. He said, yeah, I mean, when it doesn't work, it blows up in your face, but when it does work, you make a lot of cash. Now, I'm pretty sure that MiFID II, the regulation that came in the coming years, prohibits that behavior. Last time I did the regulation for the IAD, you're not allowed to say that, right? But back then, hey, yeah, just keep plowing in until you blow up. So, things like that. And then they used to peddle the moving average crosses, the Ichimoku indicators. I think the price action, real-time price action, and relying on order flow. Now, market profile is order flow and auction process, right? It's order flow. You're not looking at some lagging data. You're looking at real-time behavior of price at a particular area, right? You're looking at distribution curves that might be laggy, but they're not laggy. They're kind of like, that was the distribution curve from yesterday. That's when most of the business happened. And then as we get near it, you want to see how the price behaves around it. Same thing with VWAP. It has a volume weighted average in it, which is better than moving average and more reactive. The MAs, regular MAs, price would just wag up and down through them like there's no tomorrow. But VWAP, it's got volume in it. So it's like, you can see there's the POC not too far from there on the visible range as well in the 30 minutes. So what does that tell you? It tells you that a lot of people did trading there. Is that lagging? Well, not really, because we've come up to it and now we're looking at real-time order flow. How is the auction doing? That's a real-time process. Right now, the auction has failed at the first attempt, but also struggling in the middle. That's all, a better way of looking at it than not really having the situational awareness and just looking at some random Ichimoku cloud and I'll be above it or below it or inside it. So, there might be a use for it, but me as a price action trader, I would never go back to using non-order flow and auction process indicators. Abdullah Tariq says, can you please provide a brief insight into copper? I can, but copper is just bleeding a little bit now. Don't really have anything to say on copper until we get into the CPI. So I'm going to be looking for my setups after the CPI. So I don't plan to trade it. But for now, very spiky, but bleeding. So extension of the initial balance downwards and continuing to extend lower. However, there are no single prints, so this is not a strong auction. It is a medium strength auction because we are building structure. We have a poor low, so we have 2 TPOs that are kind of like a double bottom, which is what a poor low or poor high means. But yeah, I mean, nothing, I wouldn't be getting involved in copper before CPI today. Okay, any more questions? I think we're done for today. I've been here for way too long. You're probably sick of me. So let's carry on into the day. I'm going to have a good rest now before the CPI release. I will probably see you tomorrow for the London session, but then also during the main broadcast. Bruno is asking me, actually, do you recommend me staying away from trading? Most of the time I hit my MLL. If that's your experience, then just avoid trading. Lock yourself out. You don't need to trade CPI, right? I actually still like trading after the 9 a.m. CT. So our time, that would be, actually you're in France, so that would be 4 p.m. your time. So before that, I wouldn't even look at the setups. And I did most of my career like that because I just didn't, after my FOMC big loss back in 2015, I think it was. No, 2014. I just don't get involved in releases until they're over and done with. And then sometimes I just have a day off to go do something else. Markets will be here. We don't need, in fact, there's an argument that trading, the repricing the next day, if there's something to reprice, might be a better choice. So anytime I see a big release, the next day is where it's at. So hopefully that helps. All right, guys, thank you for hanging with me. Always good to see everyone. Great questions as always. Minimal troll activity, always a good thing. If you're thinking of joining us for the Back to the Futures or something similar, please fill out the casting call form over here. If I can actually grab that. And come hang, We'd love to see you. That's all from me. I'm Deeyana Angelo, aka Marcus Stalker D. And this has been the London session on TopstepTV. Take care.